Okay, I'd like to bring this meeting of the Financial Audit Advisory Committee to order. And I guess we will begin with a roll call vote. Arthur Fullman.
Yes, here.
Wendy Ravelli, have you joined yet?
Well, it looks like she's coming on now.
Okay. Let's continue. Court Booth.
Present.
Carol Wilson.
Present.
And do we still have one opening?
Yes.
Right. Okay. And Wendy, are you online now?
Yeah, I am. Thank you.
Okay, so that's, and then myself present. So that's today's roster, I believe. And our first order of business is the approval of the minutes of the meeting, our last meeting on June 14th. So are there any comments on the minutes?
Comments?
I thought they were very comprehensive.
Yeah, as did I.
Excellent.
Move to approve.
Okay, do I have a second?
Second.
Okay, roll call vote. Court, while you're on the screen.
Aye.
Arthur,
Yes, I.
Wendy,
Aye.
Carol.
I'll abstain. I was not at the meeting, but the
Okay,
minutes
but-
were very helpful. Thank you.
Okay, and actually, you can vote for minutes even if you weren't at a meeting, just based upon their form. But anyway, that's okay. And myself, Matt Johnson, aye. Okay, next order of business, that's very fast. We'll review the letter to the select board for the FY21 town audit. And I guess, we went over the audit materials last time, but now this is the letter. Any presentation that we'd like to make of that letter? Mary, is anybody gonna talk to this, or are we just saying, hey, there it is, looks good?
It looks like it's following the template that is time honored at this point.
Yeah,
Yeah, I'm sorry, I'll jump in. This is Gail Dowd. I did follow the templates that we had used in the past under the thought that was tried and true. So I tried to keep it as close to that as possible.
okay. Now, I know I'm jumping ahead a little bit here, but when I compared that to the regional school district audit letter, I noticed that in the case of the 5 points, in the town audit, there was a kind of a management response, whereas in the regional school district one, there was not. Is there any significance to that?
The significance to that is at the time that we did the letters, we had not received responses yet. I can quickly turn it to Ian and Bob and see if they have responses they'd like to insert, but this was based upon the packet that was reviewed with this committee back in July. And at that point, the letter had just recently come out and there were no responses.
Okay. And then is there any action required by the Financial Audit Advisory Committee on these letters, or are we just looking at them? Do we need to vote to approve them, to accept them, anything like that, or this is just the letter?
I think, Mary, you're on mute.
Proceed with approving or accepting the letters, and then they get sent to the select board and to the regional school district.
Okay, so I guess we'll do these one at a time. So move to approve the town audit FY21 town audit review letter to the select board that has been prepared for our review today.
So moved.
Okay. Okay, any discussion? Seeing none. Okay.
I just have one question.
Yes.
Do we want to defer on the regional school until we have a response, or do we want to approve them as presented?
I wonder if I could weigh in and say, I think it's a good question, and I'd like to address it to Bob. Bob, would you be more comfortable if you in your office had a response to these, which indeed we have done in previous years from the region?
Can
In
I
my
just-
pre-
are we
We
commenting
have
on the
one
town?
audit comment, I believe. In my previous district, we didn't necessarily respond unless it was a significant finding. At this point, FY '21 is over 12 months in the past, and we're closing FY '22. We can prepare something, but whatever occurred in FY '21, we had turnover last year. I can't say for certain we're not going to have a similar comment this year. But if the committee felt it would be helpful, we can prepare a response.
Well, I guess I have two questions regarding that. First of all, with timing, is there any timing concern about us not doing the approval now? I guess we're, we have a kind of a cadence here where we do present these letters. Any concern about that, Mary?
Well, I think that, like it was commented, it's, we've already closed 2021 a while ago. I think, we need to get something to these committees just to say that we've reviewed the financial statements and that we're accepting them. But I guess it's up to the committee what they, how they feel, because then it will be requiring scheduling another meeting, then to approve the letter. But it's
Yeah,
up to
so here's my suggestion. I think these letters are likely to go on our consent agenda at a future select board meeting.
Yeah.
And what I would like to do is perhaps go ahead and accept these. But Bob, you obviously have reviewed these letters, and I assume you concur with the comments that were made. Just if I have that sort of verbal assent, then I could pass that on. And I think you've already made the statement that there's the possibility that the same points will be made for this coming year's letter due to turnover. But yeah, I think if I, had those 2 points in my pocket, then if there was any question about that, I do agree with you that, this is at this point, the annals of history.
So I guess to answer your question, I'd be comfortable accepting it as is. Ian might be able to speak more to it. I do think the comment is appropriate for FY '21, and some
Good.
steps might have been taken in FY '22 to address it, but I know it was particularly challenging with a vacancy in the role for a period of time.
Sure.
And I also know that, through the FY '22 audit, we're going to go through this in detail if there are findings with the auditors and have it, I'd like to see it explained in a little bit more detail than it's presented in the way it's written.
Sure.
Because
These are clearly summaries. Yeah.
Yeah. But so, yeah, I think it would be prudent to move forward because we're in a cycle where we're a little bit off schedule in terms of when we're closing out these letters and when the fiscal year actually closed.
Okay. Thank you. So I guess then that hopefully answers your question, Carol.
Yeah, no, that's fine. I wanted to at least have an opportunity to ask if there was anything they needed to add, but
Okay, so we have a motion on the table. I believe it's been seconded. I believe that concluded our discussion. So now I will do a roll call vote. Arthur Fullman,
Yes.
Wendy Ravelli,
Yes,
Court Booth,
Yes,
Carol Wilson,
yes,
and myself, I. So that was the town audit letter, and now moving to the Concord Carlisle Regional School District letter, move to approve the letter as written and supported by the verbal commentary that we got from Bob.
I'll move.
so
Second.
Okay, and I don't think there's any further discussion, so roll call vote. Mr. Fullman,
Yes, aye.
Ms. Ravelli,
yes,
Mr. Booth,
All right,
Ms. Wilson,
yes,
and myself, Mr. Johnson, aye. Okay, so that takes us to the review of the financial statements for the municipal light plant. the main event for today. So who will be presenting?
I'll be presenting. My name is Zach Ventros. I'm an audit manager with Melanson, and I think what I might do here is share my screen so I can have a copy of the financial statements up for
Sounds
all to
good.
see. Can everybody see?
Yeah, though, I mean, we're
Yeah.
seeing a full page. It's
Oh.
not going to be very legible until.
Perfect. I will zoom in at times to maybe highlight some more closer numbers. So it'll be a bit easier for me to show you folks exactly the numbers I'm kind of highlighting. So today I'm going to go through the financial statements. I'm going to highlight certain account balances and some certain account balance trends. So if anybody has any questions at any point, please feel free to stop me and we can handle those at those times. Before I jump in, I think it's important to have a takeaway or conclusion for my presentation here today. And I think the takeaway and the conclusion is that the plan has good financial indicators and is also part of the town's well-funded OPEB trust fund, and the retirement system is well-funded as well. So it's in a good financial position. So I think that should be the primary takeaway from the presentation here today. I'm going to go down to the first page after the table of contents, and this is the first page of the independent auditor's report. The plant received a clean opinion. This is the best opinion you can receive from independent auditors, and it's the same opinion that the plant has received in prior years. Next, I'm going to go down to page 5, which is the first page of the management's discussion and analysis. And the management's discussion and analysis takes place on pages 5 through 8. And essentially, this is just a narrative summary of the results of operation. And this section also discusses any major financial areas. So instead of just simply sitting here and reading this to you, I'd actually like to turn to page 9, which is the statement of net position, where we'll discuss the same things that are discussed here in the management's discussion and analysis.
Yeah, that's good. Thank you for enlarging.
You're very welcome. So this is the statement of net position. It's essentially the balance sheet for the municipal light plant and broadband activities. As you can see that there are comparative totals for 2021 or for 2022, or excuse me, 2020 with the 2020 audit figures in there. What I think is important to note is there is a breakdown for what makes up light versus what makes up broadband on pages 42 through 44. I am not going to go there now, but if you'd like to see the differences between those balances are a consolidated balance for both the light and the broadband activities. So again, that breakdown can be seen in some supplementary information on pages 42 through 44. But we're going to stay focused just on this page for the time being. And the first item I'd like to bring to your attention is capital assets, other capital assets net of accumulated depreciation. And that had a balance of $36,662,000. It's about a $958,000 decrease from the prior year. Now that decrease is primarily due to your depreciation expense for calendar year 2021. So about $2 million, but the plant did have about $1 million in additions, which is why you see that decrease in that figure as your depreciation expense exceeded your capital asset additions in calendar year 2021. The next item I want to bring to your attention is actually unearned revenue. And unearned revenue has a balance of $2,145,000. It's about a $1.7 million decrease from the prior year. Now, the breakdown of this can be seen on page 20. And this decrease is primarily due to the use of the provisions for rate refund. So the plant did a cost of service study, and it was recommended that the plant needed increases in your rates into the future. So instead of having a very large increase in a given year, the plant started utilizing some of these provisions for rate refund to kind of soften that rate increase to the ratepayers over time. So it's about $145,000 was recognized each month. So taken out of your unearned revenue and recognized as revenue. We'll see that a bit more on the income statement piece of this, and I'll talk about it a bit more in a little bit. But instead of increasing the rates in full 1 year, they're going to be increased incrementally over time. And to help with that impact, the department utilized some of these funds in their provision for rate refund to soften that impact in a given period or in a given year to the ratepayers. The next item I want to bring to your attention is under non-current liabilities, and it's bonds payable net of current portion. And that has a balance of $2,886,000. Now, the reason I wanted to bring this to your attention is users of your financial statements, bond rating agencies, and others like to see this debt being paid off between 70 to 75% of debt being paid off within 10 years. When the plant will be paying off all of their debt within 8 years, which gives financial flexibility to the plan and is a good financial position for the plan to be in, and will be viewed favorably by your users of the financial statements that 100% of your debt is going to be paid off within 8 years. The next item I want to bring to your attention is the net pension liability. And that has a balance of $1,164,000. It's actually about a $1.9 million decrease from the prior year. Now, what this number represents is actually the plant's portion of the total unfunded liability for the Concord contributory retirement system. Now, the plant's portion of that unfunded liability is about 10%. And what's important to note about this presentation is this liability is being presented as of December 31st of 2020. So the December 31st, 2020 liability is being presented in your 2021 column. And this is allowable per Governmental Accounting Standards Board statement number 68. So that presentation is allowable, but I just wanted you to note that that liability is as of December 31st of 2020, not December 31st of 2021.
So there's a lot of water that's come under the bridge since then.
Yes.
So, and not only just simply the experience of more, the employee retirements, et cetera, but that changes in market conditions. I saw the assumptions that the pension liability was built upon, and clearly those assumptions wouldn't have to be revised for future audits, it would seem to me. Assumptions around inflation, for example.
Gotcha. I'm not going to speak to the assumptions necessarily for moving into the future. That is
okay. Yeah, sorry. We are talking retrospectively.
Gotcha.
Okay. Yeah, same thing with forthcoming capital expenses. I mean, we're paying down all this debt, but are there forthcoming expenses expected? Okay, thanks.
So the reason for that decrease in that liability is really twofold. The first one is that investment results for the system came in greater than what was anticipated for calendar year 2020. And for the entire system, investment results came in about $4.8 million greater than what the system anticipated. So that those investments that came in greater than what was anticipated helps reduce that liability. And the portion that's related to the plan is about $480,000. Additionally, there was a decrease in that liability for the entire system for about $8.1 million due to some differences between expected and actual experience. And the portion related to the plan is about $818,000. What's I think also important to note about the Concord contributory retirement system is that as of December 31st, 2020, it was at about 94.5 or 94.6% funded. Now, when we look at what's the average in the Commonwealth, what we see is about average in the Commonwealth is about around 75% funded. So to have a retirement system that's at about 94, 95% funded is a good financial position for the plant to be in. The next item I want to bring to your attention is your net OPEB liability. And OPEB stands for other post-employment benefits. This is essentially your health insurance. And that had a balance of $1,080,000. It's actually about a $1.1 million decrease from the prior year. Now, this decrease is due to a couple of factors. And the first one is a change in assumptions. So in the prior year, the discount rate was 6.5%. And in the current year, it's actually 6.75%. So that increase in the discount rate helped decrease the liability. Another assumption change was there was a change in the participation rates, which helped to decrease that liability as well. And then additionally, there was a difference between expected and actual experience that helped lower that liability. And to provide some detail on that, the health insurance premium increases were less than what the actuary had anticipated in reality. So when there is a difference between what they had originally anticipated and what's actually happening, it helped decrease that liability. Likewise, the number of Current retirees who have their spouses and families on the health insurance was less than what was anticipated, which again helped decrease that liability for the plan. Now, what's important to note is that approximately this liability is at 64% funded. And if I go towards the back, I think showing you this is a great, this is some required supplementary information for your other post-employment benefits. So as you can see, in totality, the actuary has calculated the liability to be $3,029,000, but the plan's already put aside about $1,948,000, which leaves you with that net OPEB liability of about $1.1 million. So you can see it's at 64% funded. When comparing that to other like departments in the Commonwealth, it's a bit higher than what we see from others in the Commonwealth or like departments. There are some that are up there in that 60% range, but I'd say the majority are around that 40% range. So to see have a OPEB trust fund that's at 60% funded is again going to be viewed favorably by your users of the financial statements when they're comparing it to other like departments in the Commonwealth. Generally, what we see for towns is anywhere from 0 to 10%. I'm sure that the Concord towns OPEB trust fund is not at 0 to 10%, but just kind of giving you some more insight for what you see these liabilities in funding percentages of these liabilities in the Commonwealth. So like departments are generally a bit higher than the cities and towns, but again, having it at 64% funded is a good financial position for the department to be in.
I think our town's at 95%.
Fantastic.
So can I just ask, this is Arthur, this shift in assumptions and which appears in shifting in some of the numbers, is that because we largely have a new team in place and new actuary? I mean, are we just sort of revisiting some of the old assumptions and I don't want to say cleaning up, but just reviewing them in a somewhat different way? Is that an accurate assessment of why we have these shift in numbers and, as you say, assumptions?
I don't believe that the actuary changed, and I could be wrong in that. I don't know, Sarah or Matt or somebody else on the call, did the actuary change? I don't believe that it did.
No, it hasn't.
The same actuary, okay.
But
I
you
believe
did
it's-
change the discount, right? So, I mean, that's a significant assumption change.
It is. So what the actuaries will do is they will have conversations with city or town management as well as review what's going on in the market, what's going on in actually what they'll do is they'll do an actuarial study. They'll take information from a whole. They'll do it for a period of 4 or 5 years. They'll say what's going on with retirees. When are people retiring? At what age are people passing away? And then they base those factors into their actuarial assumptions. So if there's a new actuarial study that's done, that may impact the assumptions that they're choosing for the actuarial evaluation in relation to the plan here.
Are you seeing similar adjustments and assumptions in other community light plant operations?
That's correct. The assumption that I'm seeing most frequently across the board, Arthur, is it's maybe not necessarily a change in assumptions, but it's a difference between expected and actual experience that I talked about. And this one I've seen most frequently is that premium increases are less than what actuaries anticipated. So across, I think a general statement that across the board we're seeing that OPEB is decreasing for our December 31st, 2021 clients. And that's due to these health insurance premiums being less than what the actuaries had originally anticipated.
Thank you.
You're welcome.
And then,
I'm gonna
Zach,
move-
can you confirm something for me? Our net pension liability is still expected to be fully funded by 2030, right?
Sarah, can you answer that one? I don't audit the Concord retirement system, and I think Sarah might be able to answer that question.
Okay.
I believe so. I haven't looked at it in a little while, but
Yeah,
it-
I
it
thought I
definitely
read
hasn't
that
been
in
extended.
the, yeah.
There's no change there. I was just looking to confirm. Thanks.
You're welcome. And at the retirement system being at 95% funded, I wouldn't be surprised if it's fully funded before 2030. I'm going to move down to the statement of revenues, expenses, and changes in that position, which is just the next page, page 9.
Zach,
And here,
can you go back for a sec?
sure,
sorry.
Wendy. No need to
So-
apologize.
Yeah, there are sort of two things. I did see a drop in the accounts payable, but I just assume that's partly a timing thing about when we cut things off.
Yeah, I did look into that, Wendy, and I didn't see anything that was significant or to note. It's primarily made up of purchase power expenses, and it's generally just a timing difference from year to year. It does ebb and flow. Some years it's a bit higher, some years it's a bit lower. So nothing specific there.
Okay, and then the second question I had was on the unrestricted funds. So, we've over the years had higher funds in our bank, and it's been, drops a fair amount in the last few years, but that's not a bad thing necessarily. But my question was, typically that unrestricted fund, when we look at the health of that, the town has a different standard, but for the light plant, is it still fair to say that that unrestricted fund balance should have be healthy enough to cover 3 months of operating expenses? And I wonder if we're actually meeting that target.
Are you talking about this unrestricted, Wendy, or are you talking?
No, just the unrestricted.
So the way that I tend to look at it, Wendy, is I actually look at maybe in a different way. I'll look at your unrestricted cash. I'll add in accounts receivable, and then I'll also add in your prepaids, and then I'll subtract out your accounts payable to kind of give you a kind of a quick, a quick ratio, if you will.
Quick ratio.
And then I like to see if that equals 3%. And you are correct with that calculation. We do the industry average is, or what the industry recommends, is that having 3 months of operating cash, if you will, or quick assets to cover your 3 months of your operating expenses. I did do that analysis, Wendy, and it did decrease from the prior year. It is no longer. Last year it was at about 2. This year it's at about a half of a month right now. So it did decrease from the prior year.
Okay. Something for the light plant to be watching carefully, I think.
I would agree. Anything else, Wendy?
No, thank you. Appreciate it.
You're welcome. So moving on to the income statement, which is the statement of revenues, expenses, and changes in that position. Just a couple items that I wanted to talk about here. And the first one is purchase power. And it's going to relate to some of the operating revenues up above, but you can see that purchase power had expenditures of $22,262,000 in calendar year 2021, which is about an increase of about $2.9 million from the prior year. And that's due to the cost of power going up. And you can see that that increase in the purchase power was offset by an increase in the electric sales of about $725,000. But the big one is this rate refund. You can see that rate refund had about $1.7 million of revenue recognized. And that's what I was talking about, earlier with the unearned revenue. So in the past, the department had accumulated this balance for the provision of a rate refund over the course of a number of years. And due to that cost of service study, it was recommended that the plan to start to recognize some of those revenues to offset rate increases happening just in one fell swoop. So you can see that purchase power did increase by about 2.8 million, but it was really offset by this 1.7 million here that was recognized, as well as about 725,000 that was passed along to the ratepayers for the plant. And then the other one I wanted to bring to your attention is this renewable energy certificate revenue. You can see it actually increased pretty significantly. It had a balance of $3,363,000, which is about a $1.6 million increase from the prior year. Now that increase is due to an increase in the rate. For the majority of calendar year 2020, that rate was about 10% or 10 cents per kilowatt hour. And in 2021, that increased to about 20 cents. So you can see that that figure almost doubled, and it's primarily due to the rate for those renewable energy certificates that's billed separately. Does equal the rate doubled and correspondingly the revenue doubled as well.
I saw though that the accounting of the RECs as assets, they were not counted as assets, I guess because there really is no standard for doing so. And I'm curious because I assume more utilities are banking RECs, and that this will continue to increase as a factor in municipal power going forward.
I have seen that the rates, so not all not all light departments charge a specific rate
Of course,
for
I
renewable
understand.
energy
We're kind of in the
certificates.
lead on this, but.
Yes, you are. I haven't seen anybody else do it so far yet. So
Really,
this,
I thought that there were at least a few others like Belmont.
I'm sure that Belmont or others are out there doing it, just not audit clients of Melanson. So I haven't
see,
been
okay.
privy to that, detailed information, if you will. So yes, the rate that's being charged did increase. Currently there is no accounting guidance for how to handle these recs. I wouldn't be surprised if something comes out in the next few years, given the increase in volume in these, and the consistent move towards, renewable energy and the goals that have been set by the Commonwealth for, I think it's 2050 or 2040, or I can't remember the exact date, but I know that they have some goals that are set for the amount of renewable energy that has to make up your portfolio by those dates. So I wouldn't be surprised if some firm accounting comes out on how to really handle these. So what they've really been handling is as a reduction in your purchase power expense. Currently is the way that the plant and others in the Commonwealth have been accounting for these recs so far.
Okay, and I mean, because they do have value, not that we intend to sell them, but.
Yes, so if you actually look at the note disclosure.
I mean, I know it's probably facetious to compare them to Bitcoin or something, but they're a virtual asset,
Yeah. So note 21 on page 36 and then 37 kind of shows you the balance. So as of December 31st, the plant did have 89,000 mass class 1 renewable energy certificates with an estimated value of about 3.4 million. So those are on hand, haven't been sold yet. So the impact of those haven't been met yet. So you do have a considerable amount of renewable energy certificates for fiscal year 21, as of December 31st.
Yeah, that third column should probably not have a dollar sign in front of it.
That is correct. I will make a note of that.
And then Matt, just for awareness, these are funds that the fund itself is used for RECs, but can also be used toward the purchase of green energy as we expected the cost would increase. So it doesn't have to be RECs by the nature of the fund description.
Yeah, and that's key.
Yep.
So so those funds are dollars and cents to some degree, some of them.
Yeah, I mean, we are using them to buy RECs for sure, but the nature of the fund restriction says it could be used toward purchasing of green energy, which we expected over time would be the case.
You mean incremental cost of it?
Yeah.
Yeah.
So I think our strategy, we usually buy these, I think we have a limit. We have to purchase them by May or June of the following the calendar year. So there's a cycle that we go through on actually purchasing those RECs, which, the REC prices are increasing, so we're getting less for our dollars, but, we're still continuing with our strategy to increase RECs.
That concludes everything that I wanted to share with you folks here today. But if I could have a quick moment, I want to thank Matt Cummings, who I know is on this call, and the entire CMLP staff for being so well prepared and easy to work with. We were actually on site the third week of April, and Matt had everything prepared and complete. And I'm sure you're asking yourselves, if you were on site the third week of April, why are you doing the presentation here in August? Our firm, I'll be quite frank with you, had a little bit of turnover. Got a little bit tied up, and I just didn't have the time to jump back in to make sure that this was done. But we've made some structural changes to make sure that this doesn't happen again. So I would anticipate that the 22 audit will be completed much sooner. Matt and his team do a fantastic job of being done timely, maintaining their records in very good order. So that the delay had absolutely nothing to do with Matt and CMLP. That was strictly on Melanson. Any other questions or concerns?
I had a question, but let me ask Mary if it's appropriate. I had sent Mary a question about the loan agreement between the light plant and broadband, and wanted to see if there was some further explanation that could be provided in terms of the write-up in the audit walks through the description, and it just wasn't clear to me whether we've used all the borrowing power and sort of just the details behind that agreement. And I don't know, Mary, if you're ready to review that.
Yeah, I did pass it on to Zach, and I believe Zach is prepared to discuss it, your question, or address your question.
So Wendy, we did reevaluate that write-up this year. And it may not be the most clear write-up in the world. I'll be the first to admit that. Kind of summation, the plant has issued $969,000 in debt. So of that 2 million authorization, 969,000 has been issued with 3 sets of borrowings. In addition to that, there is a $1.9 million loan agreement, if you will, between the light operation and the broadband operation. In 2018 audit, we noticed that the cash position for the broadband had, pretty stark decrease. And when we asked about it, we were informed by plant management that they did not want to borrow to cover that deficit, that they wanted to loan have a loan, an interest-free loan from the light operations as a way to save the ratepayers money over the long haul, since that there would be no interest portion to that $1.9 million loan, if you will. So we had recommended in 2018's management letter that the plant formalize, because there was no formal agreement or written agreement for repayment terms or anything along those lines in relation to this $1.9 million loan. After 2018, it did increase a little bit more to its final figure of about 1.9 million. And then the plant did in calendar year 2020, of November of 2020, issue a formal written agreement between the light operations and the broadband operations for repayment terms for that 1.9 million.
So part of my reason for asking was that I know that there was a question about the details behind that loan and making sure that it was clear and well grounded, because the funding of the broadband operation is a concern, as a question about whether that liability is going to hinder the operations of broadband. And so that's why I raised it. There's been a lot of focus on that loan, and maybe this is not the place to have that conversation, and we can take it offline, but know that we talked about it in our last meeting. So I just wanted to follow up on the history.
Gotcha.
Well, I guess the main question on my mind is whether the loan balance and repayment terms reflect the liabilities that are specific to the broadband business, and are accurately reflect the amount of capital requirement that they had and are using to further the business.
Yes.
In other words, did they need the whole 1.9 million, and are they using it? Or do they have the use of it, and and is paying it back on the terms that would be sensible for that business versus the light business?
So that 1.9 million, maybe to provide a little bit of insight here, it wasn't that the light department gave 1.9 million over to broadband to expend. Broadband expended the 1.9 million, and then subsequently said, we're loaning this from the light operation. So that money has already been used for capital purposes.
Right, but so this does reflect, though, spending that was made by broadband and that now is being accounted for by the light plant, because they fronted the money, in effect, to the broadband side in the beginning, and didn't really account for it at the first, but now they are.
So maybe I can share my screen again and show you maybe a little bit of detail. I don't know if this is going to help or not. Let me know when you can see.
Yep.
So this is page 42, and this is in the supplementary information. So as you can see, here's 2020, here's light, here's broadband. And you do see an asset on light for 1.9 million. And then broadband subsequently has a liability due to light for the 1.9 million. For presentation purposes, light and broadband and for financial presentation and audit opinion purposes, they're presented together and one opinion is issued on them. We don't issue separate opinions on light and broadband. It's all one opinion. So we have to remove the effect of the internal borrowing, if you will. As you can see here, that it's an elimination column where we're removing that for the statement of deposition that's shown on page 9. But you can see that in the breakdown for what's light and what's broadband, that 1.9 million is identified as a liability for broadband.
Okay, thanks. And then that's being consumed over time, right? That.
Yeah, so here's the repayment schedule. In 2022, there'll be a
Yeah, so it doesn't
$75,000
reflect it. There are no repayments as of the audit that we're looking at, but there will be. Okay.
That's correct. And it'll end in 2032.
Okay, thank you.
Thank you, appreciate it.
Any other questions, comments, or concerns? Awesome. Thank you so much for having me, folks. I appreciate the time presenting me here this morning to present the financials.
Thank you very much, Zach. It was very clear. Wendy, just an aside, do you anticipate subscribers on broadband to remain flat, which is what they look like now?
So I'd like, probably Jason should comment on that. He's
Okay.
a little closer to it. I think he's been doing a lot to increase our marketing and position the broadband, the business. So I defer to him at this point.
Yeah.
Projections.
And I guess more specifically, my question is, are we dependent on achieving certain goals there? And I don't know if today is the place for it, but that certainly is a question that comes up when I look at this report.
Fair question. We're sort of looking at the long-term investment for the business, but again, we're sort of in the process of trying to evaluate a number of investments for the future, and then really looking at that strategy question this year as well.
Mhm.
Okay.
So do we turn to a management letter now for light plant? Are we, let me go back to the packet.
No
Where are we
management
at?
letter.
There was no management letter in relation to the calendar year 2021 audit. We should have brought this up earlier. So my apologies for not clarifying. The department's internal controls and the maintenance of their records are in good standing order. We did have a couple small verbal recommendations to the plant, but nothing that we felt was necessary to meet the needs to have a formal management letter. Matt and his team take the internal controls, our recommendations, and the maintenance and maintaining of their financial records in very good order, and they take it very seriously. And that's reflected through the fact that there is no management letter this year.
Is there any reason not to note that somehow?
Yeah.
We're so used to seeing management letters, and now we have an audit where there isn't one. Clearly things are going well on the reporting, but in terms of practice, do you make note of the fact that there's no need for a management letter, or you just leave it for us to ask the question?
I apologize. I should have brought that up in my presentation. So I would say that maybe 10% of Lansing clients don't receive a management letter. So about 90% do. So the vast majority do. So the fact that there is no management letter does put CMLP in very high esteem in good company with the other municipalities that don't receive a management letter. Sarah, I'm going to ask you this question because you got a little bit more experience than me. I believe at one point in time we did issue a no management letter. Is that correct?
I think you should have one that says good to go. Thanks.
Yeah.
I've heard that rumor also, but I've never actually seen one.
Yeah, if the plant would, if you folks would like us to issue that, I can certainly dig into the history of Melanson and try to find one. But I believe at some point in time there may have been a no management letter or management letter.
Somehow or another,
Similarly,
it seems to me that it completes the circle. If there's something that says, nice
Yeah.
work.
Okay, I will certainly look into that, and and if it's something that you folks would like, I will certainly issue that and send that over to the folks here on this call.
I'd be in favor of that. And in lieu of that, if necessary, this committee could make that statement that we've heard from
Yeah.
Melanson to that effect. Because it does sort of close the chapter to.
Right. In fact, I wonder whether, like, do we need to vote to accept the audit? What do we do?
Yeah,
in-
traditionally, our management recommendation back to the life plant would be premised on a management report, right? Usually those findings. So I think it's important that we have some kind of formal letter reaffirming the position of the financials from the auditor.
Even if what I was saying, where there was maybe one back in the day, if I'm wrong, I'll create one. We'll figure out something, whether it's a memo or something that provide with you folks to very clearly state that and close the loop.
And
Okay.
I'll jump in quickly. I also will be doing a letter similar to the two that you just approved for the regional district and the town. I will make sure to put a statement in there to say that there was no management letter comment.
Yeah, and it maybe that's it. We'll just.
Yeah, that does, that
Your letter.
covers it.
Yeah,
Yeah,
I think that's
it
fine.
just- we should
So
acknowledge.
do we have to take any action at this point based upon, the audit that we've just seen, the calendar year 2022 audit for CMLP?
I think basically in the past is when we have the letter that we're gonna present.
That we
to
would
the
take
light
action.
board, we would take action at that point.
Okay, that sounds fine. So then I think we're done with this topic. And thanks so much, Zach, for your presentation. I thought it was excellent. And congratulations to CMLP for calling into question the need for a management letter.
Yeah.
So let's now move on to Jason Bolger, who's going to talk to us about cybersecurity. Jason?
Actually, we were gonna talk about the audit plan.
Oh, the
Yeah.
audit plan, excuse me. I flipped this. Yep. Okay, so take it away.
Hand it over to you, Sarah. Do you want me to put that calendar up, or do you?
If you want to,
Yeah, let me see if I can. I know I was struggling this morning with it. Let me see. Share my screen. Oh no, that's not it.
Oh,
there it is.
There you go, Mary.
Can you see it?
Yes.
Okay.
Okay, so this is a similar document that I think you guys have seen in the past. We kind of just took the prior year one and tailored it a little bit, changed it a little bit for this year. We're pushing things back a little bit. We're, again, like I think Zach mentioned, we've lost some staff and we're a little behind on everything. But we're still gonna work on getting the towns and CML, or not CMLP, Concord Carlisle's audits done in the timely manner. So with the town being an annual comprehensive financial report, it is supposed to be submitted to the GFOA by the end of December. So that's what we've kind of set up this plan right now to, start field work within the next month and have draft statements available at the beginning of December, beginning to mid-December, so we can have it submitted on time. Should be helpful. And Concord Carlisle is usually just a little bit behind, but we're not anticipating any issues with theirs, and theirs does not have to be submitted to the GFOA, so it has a little bit more leeway. I don't think, Mary, there wasn't really anything. I mean, I know the town, the only other thing I wanted to just bring up, and I know I've talked to Mary about it, is with the town implementing Munis, that it could impact the audit, since they're trying to implement Munis kind of along the same time that we're trying to do the audit, is the only thing that I've kind of brought up, and that this is going to be contingent on all the information that we need being available in a timely manner.
Yeah, and I think at this point, our plan is to meet. We'll be making the audit the priority. And as Sarah mentioned about, we would have, the goal is to have by mid-December, the financial statements. And this will allow for an internal review with the finance staff and, have us go through sort of that first round of reviews and then be able at a, future FAC meeting to review the final draft. So the committee has an opportunity to review the statements as well.
Mary, I recall that in the past, we've had issues at the end of the year, sort of with our actuaries getting the OPEB projections. So how does that fit into trying to stay on schedule here? Are we sort of at his mercy?
Gail, I know you've been working with.
We're currently working on their request list to get it out to them. So the goal would be to make sure we're getting them the information and staying on top of them to make sure they're turning it around. It is a little bit at their mercy, depending on when they receive it, their staffing and how quickly they can turn around. But we're all definitely going to do everything we can to keep all balls moving and getting everything done timely.
Okay.
And I think on the
That's good to hear.
calendar, we said that by November 1st, if we're going to make this deadline, all that information needs to be in. And I know in the past, it wasn't until the end of November that we were getting some of the, the actuarial data. So we're hoping, and again, it's hard to predict, but our goal is to push forward to meet that deadline.
Okay, great. Thanks.
Okay, I don't know if there's any other questions on this. If not, I have one other item.
Okay, go ahead.
Okay, so there's new auditing standards that are effective for the fiscal year 2022 audits that we now need to communicate certain information to those charged with governance, which would be this group for Concord. I believe Scott kind of alluded to it at the last meeting with some of the risk discussions he was talking about. But what we need to now, we need to present to you certain information during the planning stages of the audit. And part of that is the engagement letter for the audit, which you guys actually reviewed at the last meeting. So you've seen that, I believe you approved it. The other part is that we need to communicate significant audit risks to you. Now, we've been doing this for years. We have to, as part of our audit, we have to identify risks to the audit. So it's nothing new that we were doing. It's just something new we have to actually present to you now, whether it be in a meeting such as this or in a letter format. I figured since we were doing this, this would be easier. But there's two standard audit risks that we have to identify for every single audit that we do. These risks are management override of controls, which is presumed due to the fact that management could potentially override any controls that you have in place. And the other risk is recognition of revenue, just due to revenue significance in the financial statements. And studies have shown that revenue is more easily manipulated than other financial statement accounts. So these two risks we have to identify for every single audit. These are the only risks we've identified for both the town of Concord's audit and Concord Carlisle's audit. If there were other risks, we'd have to explain those to you too, and that would be, if there was some other issues going on in the town. We don't have any of those right now, so it's just these two standard ones. And if anything does come up during the audit, we would disclose any additional risks to you at the end of, during or at the end of the audit.
So I'm familiar with revenue recognition risk related to software revenues. So clearly it's a little different for a municipality, but I guess it's probably fundamentally similar that the idea is you need to recognize the revenue over the period in which any services are provided as opposed to upfront. And it just seems like we must have adopted that as a practice, long ago. I'm just trying to think if there are any specific instances in which there would be something to watch out for us. We're providing electrical services, right? So, let's say we're providing, trash hauling. We're collecting revenues for that, and we're also, recognizing them as we deliver those services month to month. It seems like to me, property tax revenues. Is there any place where municipalities can get sideways with this?
I haven't really seen any. I mean, there is it's kind of on the modified accrual basis of accounting too with revenue, and we're kind of with the different recognizing revenue when with like the property taxes when the bills are issued versus when it's collected, that type of thing. But yeah, there's not a lot with municipalities, but I think this is kind of an overall audit standard. It's not just for municipalities. And so just since this has to be recognized as an audit standard as a risk, we have to show it as one.
Yeah, I mean, I think that like if somebody paid their property taxes in advance, we throw it in the bank. We don't recognize the whole amount they shipped in as revenue at that moment, I would assume.
Yeah, be deferred.
Right.
Okay, sounds like the risks are low.
So it
Thanks.
sounds like this is a pro forma sort of notation, which is not to minimize that it's a real risk, but it's not a clear and present danger for us.
Right. Okay, thanks.
Any other questions?
Okay, then does that end the discussion of the audit plan? Any
Yeah,
other?
I think the only thing that's outstanding would be when we want to meet to review the financial statements, but that's something that we can see where we are and then schedule the meeting to have them come in and present.
Okay.
Yeah, just a request. It would be helpful to get those meetings on the books 2 months prior.
Okay.
And then my schedule's just crazy, so I'd rather block it.
Yeah, I was gonna say the same thing, is that do we know when we want to do these? Should we be getting together before December?
Is there a need to, if there's anything to review?
Yeah.
I don't know.
Yeah, I know meetings passed, right in the meeting, you guys have decided which day you wanted to meet.
But this is a little longer interval this time, right?
Yeah, I think because everything slid, we didn't have, I think the last meeting before we met in June was like September, October.
Yeah,
So yes, there was lots of changes between them, but if the committee feels that they want to, we can shoot for, this, when to meet. I'm assuming, I mean, if we're not going to have financial statements until the middle of December, do we book something in January to then, review the financial statements and,
Yeah,
We should, because you want to get the town one going, right, by year end. So usually we meet in December.
Yeah.
Or at least have a placeholder.
yeah, I mean, the thing is in December, depending on when you want to meet, I mean, we can have a meeting whether or not the financial statements may be available at that time. That's the issue.
Yeah.
So I was thinking along similar lines that we're going to look at that audit calendar and identify the best possible date.
Yeah.
As we know it now, knowing that we sometimes have to postpone.
Yeah,
And just a notation about that calendar, were we to see 2023 on that calendar, is that when fiscal 22 for light plant would begin to appear? Because we didn't see that in the timeline.
yeah, I kind of left it here because I wasn't sure and kind of left it for more discussion. I don't, don't know. And I guess I can ask Matt about it when he, and with Zach and here too, is typically your audit work would begin in January, or is it later in February, Matt?
Typically, we begin in April.
It begins in April. Okay. So
I can defer to Matt on that. If Matt has a different idea of how he'd like 22 to go, we're certainly open to being out there sooner. So I'll defer to Matt.
Currently, I think the best time frame is April right now. I'd like to move it up a little bit quicker, but at this point, I think April's the most doable for the next few
Okay.
years.
So it would be audit work beginning in April. And then with the expectation of the financials being available.
I don't see a reason why we couldn't have the financial statements available by the end of May.
End of May.
Yep. So if you were to have a meeting in June, that would be fine by my calendar.
Okay.
So I'm going to suggest we set something for January if indeed we're not going to have certainty that we'll have material to look at until then.
Yeah.
Notwithstanding the idea that if we could get back to December someday, well and good.
Could I also just throw out for consideration that in terms of the testing, at some point we think in the past, I know it's been done like this at other places, that there's interim testing done to get a lot of the transaction testing done in either May or June, just to get that out of the way so that more of the year-end stuff can be done later and it reduces the scope for the second part of the work.
We have done that in the past. I think it's just been since, I guess since the pandemic, things kind of just like put a wrench in it. I mean, typically we would start our, audit work around the May timeframe, and to have the statements, ready for review in the December timeframe. But, as more GASBs come into play and, the OPEB and pension, that has been the biggest piece with our delay. So.
Right. Those are year-end requirement. Those are not things that can be tested in the interim anyways. I was just proposing getting rid of some of the looking at transactions that they necessarily have to do as part of the audit because we have 9 months of data. It just gets some of the work out of the way. And if it doesn't make sense for the town, that's fine. I was, proposing more from the regional district's perspective.
And we do prefer to actually come in and do some of that interim testing early. We've been a little short-staffed and behind lately, so some of our interim testing has gotten kind of pushed back just because we're still trying to finish up some of the prior year stuff. But if possible, we will try to get in and do some of that testing earlier, especially going forward.
Thank you.
So do we want to go ahead and schedule a meeting for January then to get that? I mean, is there?
I propose January 10th, 8:30 a.m.
January 10th, 8:30 a.m.
Tuesday.
A Tuesday. Okay.
Seems to be our pattern. Going once.
Good idea.
Good, thank you.
January 10th, 8:30.
And with the
now almost.
with the regional school district, do we need to schedule one for like the month after, or how do you want to handle that?
Is that soon enough, or does it need to be a little later than that?
Or we can do it March. I don't know, it's up,
So
Sarah, you
this
have
is-
any-
Yeah,
This is Ian, I'm just chiming in. So March would probably be a good time. We just have to get it in there before the end of March, because that's when the single audits are due, right, Sarah?
that's correct.
March 7th, 8:30 a.m.
Okay.
And then June is past my tenure. I don't know if I want to speak for my successor.
Well, we can start with these two. I mean, like I said, we have it on the calendar and that will,
Seems pretty farsighted to me. Yeah. Okay,
that's good.
good. So now I think we can move to cybersecurity, and Jason Bulger,
Hello,
take it away.
thank you. Thank you all on the committee for your willingness to hear an update on this. It's really important for the town. It's a big source of risk in any organization, and it's something that I take very seriously and our team takes very seriously. So I'm happy to talk about it as often as people will listen. I'm going to share my screen for a short presentation. Tell me when you guys can see my screen.
Good.
Okay. So I'm just really going to cover some updates. You know, I did talk to the committee last year, so I'm going to go over briefly kind of the trends that we're seeing, the changes in cybersecurity, and then talk about a little bit about what the town is doing both proactively and reactively to address these cybersecurity concerns. So what's changing in cybersecurity? So first of all, one of the big changes we're seeing is in insurance for cyber. It used to be just kind of thrown in there with our general liability insurance, and now it's becoming kind of carved out from that. We're seeing deductible increases, and we're also seeing a lot of requirements tacked on. Originally, there was nothing. Then it was you should really have a program or think about cybersecurity, and then it was very specific bulleted lists of these are the types of things that you need to do to ensure that you're protected. And I see this as a good thing because it's really going to be a strong driver in enterprise and municipalities of adoption of these practices. It's one thing for me to say this is really important. It's another thing for everyone to see the clarity that comes along with these requirements and how important that it is that the insurers are saying if people have these controls or protections in place, we're seeing a lot fewer risks and issues. So that's one change we're seeing. Historically, ransomware was something where you'd have a malicious application infect your computer or network and encrypt your data and then hold the decryption key for ransom. And that has been going on for many years. Historically, the best way to protect against that really was to have strong backups because you couldn't protect against every user in every use case. So as long as you had good backups, if your data were encrypted, you could simply restore your data from a backup. And over time, we've focused on the immutable backups that can't be modified or overwritten with encryption. But now what is happening is these malicious actors will come into your network, encrypt your data, and then exfiltrate it out of your network and keep a copy outside of your network. And so when you're being asked to pay a ransom, not only are you getting the decryption key to get your data back, but you're also they're then guaranteeing that they will not release your data to the world or publish it on the internet or dark web. And you might think to yourself, well, how are you going to trust a scammer who's already broken into your network and held you for ransom? And what they try to do is be just reputable enough to make you believe that they will do this. They have a really long track record of following through with this, including finding third-party data brokers in overseas who will actually be kind of a third party to hold your data. And the bad people can't actually see your data, unless you don't pay the ransom. So it's a very sophisticated scheme that they have. But this threat becomes a lot more serious because then you're dealing with a data breach and the cost for mitigation could be astronomical. So what you're seeing is people paying the ransom, not just to really get the decryption keys because they don't necessarily need the data if they have a strong backup, but they realize that the cost of a data breach is going to be far less than the ransom. So you're seeing a lot more productivity in these schemes. And so then more people are doing them. and trying to find more ways to reassure people that they'll follow through with their promises. So now that's shifting us back to prevention instead of just having a backup and a good way to mitigate from these issues. So so that's one trend we're seeing change.
That's crazy. The trusted third party.
Yeah.
Well, wow. Okay.
Yeah. You're also seeing a huge market for negotiators. It's often illegal for agencies or their insurers to negotiate directly with these third parties. But there's kind of a loophole if you can find your own third party to negotiate. So it's kind of like we don't want to know what you're doing, but get us our data back thing. And so you pay the money to these brokers who then work with the illegal parties, and it's crazy industry that's popping up around this. Finally, I put on here the Internet of Things. So this is things like smart TVs, thermostats, sensors, things that are really geared more toward home users, but that we're seeing pop up in the enterprise. In town, we have, TVs and break rooms for the fire department and the police department. And these often now come with Wi-Fi or network enabled so that they can have streaming service access. But as you can imagine, that these devices then become a potential entry point into a network. So, the best two things you can do is have really strong communication between the departments and IT so that IT can help advise that they make wise and smart and secure decisions. And then two, that you create a totally separate network for all these devices to be on. They don't usually need direct contact to a phone or a computer inside the network. They usually connect to a outside server. So in that case, they really only need connections to the internet. But that's why that communication is important, to make sure that they reach out to IT, we advise what types of devices are safe, and then we create them and set them up in our network in such a way that they have no access to our internal networks and data. But this is becoming really widespread when you look at cameras and televisions and sensors and other devices, a lot of outlets, and they make people's lives easy, and they think, oh, what's the harm in this? It's, I trust this big company, but it can really be a source of risk. Those devices aren't really getting security updates and patches like we might associate with more enterprise grade materials. Some other things that are changing, security was buy a firewall and buy some antivirus licenses and you're good. Now it's really shifting to the service model. You're seeing, instead of just, and I'm going to cover this later, but instead of just plain antivirus, it's endpoint detection and response. So you're seeing security operations centers that are having personnel coverage 24/7, and they are monitoring your environment. So if you get an antivirus pop-up, and it detects it, right now what happens is maybe an email gets sent to a team, and in the morning they might look at it, or maybe a week later they'll look at it, but it's not really proactive. And so this is, or I'd say, immediately reactive. So in this case, when that pop-up happens, a team looks at it and determines if it's going to spread or how serious it is, and they can quarantine the device right there. So there's essentially, it's a group of people that can be, 5 or 500 that are getting these alerts from different enterprises and then reacting very quickly to them. Also, we're seeing things like, we generate tons of log files daily. Every device that we have spits out a log file. Now, what do you do with all that data? Historically, you keep it in case there's a problem, you can figure out what it was, but sometimes these are indicators of an attack or could really be tipping you off that there's a problem. So how do you sort millions of log files that are generated daily? So you're seeing the security enterprise infrastructure and management systems popping up where they will grab all these log files and make sense of them for you, but these are not one-time costs, these are ongoing costs. So the historical model of IT really being like, okay, we need to do servers every 5 years, doesn't fit well with these security systems, because they really are looking for monthly or yearly commitment to have a service where people are actively monitoring these things, or you're getting machine learning or AI learning to say, okay, what's a good log file, what's a bad log file. As a result of the pandemic, we're all seeing what happens when the supply chain is disrupted. It's always been one of those things that we've talked about in terms of security preparation and disaster preparation, that we need to think about supply chain shortages. But In the last 20 years, we haven't really seen what that means to enterprise, but now with the pandemic and some of the delays we're seeing, you realize how important it is. We're seeing lead times of 1 year to 2 years for certain network equipment. And you imagine if that fails, what are you going to do? Well, you're going to look for a different vendor or a different model, or perhaps get something that's not enterprise grade. So you're seeing, companies and municipalities having to resort to non-standard means of ensuring that their networks and systems stay up. And you're also seeing if something fails that you have really difficult choices to make. So we understand the susceptibility of supply chain attacks that were, we imagined how painful they could be, but now we've seen just a glimpse of how painful they could be. And that's just with sort of some chance shutdowns of factories and some quarantines and lockdowns and things like that. But imagine if entire sectors are taken out with ransomware, or, factories are destroyed with ransomware, like the Stuxnet attack that happened in Iran with centrifuges. It could really be disruptive for enterprise. So what we used to think about, oh, we need to order this equipment 3 to 6 months in advance, is now really 1 year to 2 years, which makes the capital planning difficult. And then also justifying, why are you purchasing this stuff now? And also the legality of purchasing things for a future fiscal year. I mean, it creates a lot of complexity. So it's just something that we need to be aware of and plan for. The antivirus I kind of mentioned, just plain antivirus is really considered inadequate. Again, I mentioned the insurers. Our insurer has reached out and asked us to move up to the next level, not the 24/7, staffed model, but the level beyond that, where all the antivirus clients talk to each other and can automatically quarantine if there's an issue. So yeah, and then finally, the pandemic, not only the supply chain issues, but also the expectations that employees have of what access they need outside the network. It used to be, okay, you can VPN to get access to these particular things, but now we really expect that our customers, our clients, the people we serve, aren't going to want to come in to do certain business. So we need to make those services available online or remotely. And we also have people who expect to have access, whether they're quarantined or whether they're working remotely, that they need this access. So that really shifts how we need to provide our services in IT. So what are we doing in Concord? Some of these will be things that I mentioned before. Some of these will be a little bit different, but some of these are, you really have to start with repeatable procedures and processes, and you need to have policies. You can't just react to everything and say, okay, if something pops up, we'll take care of it. When it comes to onboarding or offboarding, you can't just say, hey, let's just turn on a computer and add some programs. You need to have a very standard image so that you can test for deviations from that image later. You need to make sure that when you're offboarding, you have a very comprehensive snapshot of what access somebody had, what accounts they had. Historically, that was really all controlled by IT, but what you're seeing is really a decentralization as you move to SaaS models, where software isn't really run necessarily internally, it's run from a third party. So IT doesn't always have visibility into those applications. So we really need to collect good data when we create a user so that we can follow them through. And then when they are offboarded, then we have a clear picture of that. And then, all sorts of other policies, whether it's deploying computers, destroying computers, the entire life cycle of devices needs to be procedures surrounding that. And so we work to do that. We've developed dozens and dozens of policies in the last year. And we're working now to look at all the policies that sort of outside world sees in terms of the ones that are posted on the website, adopted by the select board. And we're trying to get a comprehensive look at which ones of those needs to be updated, because almost all of the ones that deal with the computers or technology definitely need to be updated. And we have our own internal policies, but we need to make sure that those also are pushed out and seen by everyone. Making sure that data is difficult to access. So we need to make sure all data is encrypted at rest and in transit. We don't want data that's emailed or moved from one file server to another to be able to be grabbed by a third party. We also don't want a device, a laptop, a thumb drive, whatever, to be picked up and then the data is freely available on that. And that's not just a switch that you flip. It really has to be actively managed. When you have an encrypted computer, if you do a BIOS update to that computer or firmware update, you have to decrypt the drive to do that. You can't do it while it's encrypted.
Hmm.
There's other times where maybe a user's hard drive is acting up. We need to replace it. You have to decrypt it. So it's a monthly and weekly process we go through to make sure that we have eyes on every device that we have out there, and that's not a liability for us. Also, don't keep data you don't need. We work really closely with the public records officer and follow all the public records retention guidelines. We work hard on deduplicating data so that it doesn't exist in 10 different places. We're going through a migration to Office 365 right now for our files, which is giving us a really good opportunity to be selective about the types of data that we're keeping. We're putting everything else on an archive server encrypted, and then we'll go through the process to eliminate that data if it's not determined not needed, and we'll go through the reporting and filing that's necessary with the AG's office to notify them of that data. But we're not just saying, let's just copy our file servers over to the cloud. We're using this as an opportunity to work with each department and division to say, okay, here's the data that you have. Let's go through it. It might not be every single file, but let's take a close look at it to determine what is in use, what is old. There's always a history in organizations that when a person leaves, they end up with data, and that data just gets copied onto that maybe department folder. And then you'll see people's names, maybe, depending on how long it's been going on, 5 or 6 names of people. And that's a practice that you want to squash, right? You need to keep what you need and then archive what you don't and take care of it in the normal process that you go through to eliminate data that's unnecessary. Make sure that you train staff and make sure they have good cyber hygiene. This is our 2nd year participating in the state's cybersecurity training plan, and that was a grant that Concord received. Last year, they gave us a special commendation for our high level of participation and communication between IT and their staff. It was a really huge success. We had some departments that really pushed it to all of their employees, and this really does make a difference. And not only does it help them in their personal lives and help them make good decisions, but it's created a lot more communication between end users and IT. They know now to ask. And what the good thing that we're seeing is a lot of people asking for things that are not malicious, but that tells you that their threshold of when they need to ask IT about something that looks strange is being lowered because they're being aware of the types of schemes and fraud that's out there. So that's good. And then we're also doing additional training for users when we do the migration to 365. We're using that as an opportunity to talk about cyber hygiene as well for users. Lowering the attack surface, I kind of talked about eliminating data, but also decommissioning servers. I mean, organizations, a lot of times the server is no longer needed, but they kind of think, well, it'll be nice to check in with it in case, the user finds there's something they're missing from it, or one reason or another. But it's really important that you take care of those things, because at that point, you're not usually getting vendor support. They're not being patched, things like that. So it's important to do that. Since I've been in charge of the IT department, we've eliminated, I think, 20 virtual servers that we had for one reason or another, upgrading, going to the cloud, no longer needed, consolidating. And it's really important to do that, to make sure you get rid of that equipment. Make sure you lock unused accounts. If a user leaves, you need to make sure that's locked. Any service accounts that vendors might have, any computers that have domain access are unjoined if they're not checking in after a period of time. So all of those are things that we do to lower our attack surface. Another really big one is creating a culture of risk avoidance in the organization. I'm happy to say that we, through a grant from Maya last year, we spun up a risk committee, and we meet now monthly to discuss, situations in town that people are concerned about. Things can bubble up to the risk committee. The risk committee can advise on things that have happened in the past. They can communicate things that are going on, and we're also looking at trying to find a standard policy software that we can use for town-wide. A lot of different departments have different ways of doing this, but it's really important that we train users on the policies that we have and make sure that we document that. And the police and fire do that. Police does it because they need to do it for accreditation. Other people do it through some of our learning management systems or through our onboarding process, but we need to make sure that town-wide, because there really are policies that every user needs to be trained on, that we have a system that can do that. So those are the types of things we talk about at the risk committee. And it just really also highlights the importance that these managers and division managers and department heads put on risk avoidance and discussing that information. There's a lot that happens outside of Concord that we need to be aware of. We're a member of the Multi-State Information Sharing and Analysis Center, or the MSISAC. They do a great job at getting security bulletins, advisories down from the FBI, Homeland Security, and distributing them to their members. We've been a member for a few years now, and that helps the IT department express that risk to other people when we're seeing in other communities or at the state level. So that's really important to do, because it's one thing if you get hit by something that nobody's ever seen before, but it's another thing if your next door community or another municipality in the state have already gone through this. It would really be great if you could learn from that before it happens to you. Employing multi-factor authentication is huge. This is, the de facto standard for security today, is that we can't trust passwords anymore. People reuse them. They're not secure. They're not changed often enough. They're changed too much. They're written down. They're under your keyboard. They're told to other users in your organization. So two-factor authentication makes sure that you are who you say you are. We employ this both on our VPN access for anybody who's trying to get internal network access, but also on our 365 platform. It's mandatory for all administrators and all users that if they're trying to access emails or documents, that they've authenticated with two-factor authentication. And then employing data loss prevention tools. So for example, if I were to send an email outside of Concord with Social Security numbers or driver's license numbers or credit card numbers, and I did not encrypt that email, the email would not go through. It wouldn't flag it. It wouldn't tell the administrator. It literally would not go through. And it will tell the user seconds later, this email could not be sent because it didn't adhere to the policies that you have in your organization set up. So we require anything with those types of personally identifiable information or financial information or health records, anything that we can flag through a rule, needs to be encrypted when it leaves our organization. And we have a whole host of other things, like what files are shared externally and reports that we go through on that. And that just helps us get visibility into the types of data that we have, and ensures that people don't make a mistake and forget to click a button or do something like that. You have to be reactive. There are things that pop up that you're not aware of. And so we do have some reactive measures that we take too. So for instance, we have a cyber incident response plan. And that plan helps us guide us through the process of responding to an incident. Anytime we have a near miss, the fire department, does this great thing where if a firefighter sees something that's dangerous or something that almost happened, that somebody could have been hurt, or somebody was about to run into an unsafe situation, they stop them. They have a form they fill out, and then they talk about it in a meeting. And I think that's a great process, and it's something that we need to do in a lot of other areas. But it's one of those things that if we see something risky or we see a phishing email that gets through our filters, we try to notify people and talk to them about it and say, hey, just so you know, we saw this come through our filters, don't respond to it, take this action, here's what you need to do. We try to document any time that things like that happen. And luckily, since I've been here, we haven't had any cyber incidents. But they're inevitable to some degree, whether it's a phishing email that comes through or a user clicking on a link that presents a pop-up and they don't know what to do. You're going to have some small or some big incidents, and you need to have a standardized way of responding to those and consistency when you do it. Alerts and notifications, I mentioned those log files. We get a lot of emails, and every day it's common practice that we go through our alerts emails to take a look and see what systems are reporting offline, or configuration changes on switches, things like that. And we try to have really good communication both internally in our team and also with other users to say, I noticed that this battery backup went offline, but the servers are still up. Did you move some power around? Oh, the electrician's here. Yeah, we're doing some wiring. Okay, that sounds good. So we try to be in contact and verify what we're seeing and make sure that it's not suspicious. I mentioned the messages. We have received a lot of what we call spear phishing emails coming into Concord. These are when people assume an actual identity of an employee or a third party and try to ask to do something, either to get money, to get a wire, to get gift cards, to change direct deposit. All of these things have happened in Concord. Our users have been terrific. We've never let our guard down. We've never made any of these changes, but you have to be vigilant on those things. So we let people know when we see them come in. We also have a process where we have a detective that we work with closely to investigate those. And we've actually been really successful about moving those investigations forward and having some positive results. I can't go into details about exactly how it all works, but we've had a couple times where we've been really successful in getting to the bottom of what was happening with those suspicious situations. And then finally, that user training, you know, we've kind of got this culture where we're hoping that users will report suspicious activity to us, and we also reach out to them if we see something that's, you know, could be improved on. A good example is you walk by somebody's desk, they've gone to lunch and their computer remains logged in, not locked. Depending on the user, depending on their access to their software, it can be benign or it can be pretty bad. So, you know, in those cases, just remind them that there's a really easy way they can lock their computer when they walk away so that they don't leave their applications up and running, that other people can see them. So just to summarize, I feel like our cybersecurity program remains strong. We participate in this annual cybersecurity review that the Homeland Security sponsors, and it lets us do a benchmark year over year. We're seeing improvement year over year. We'll be doing our 2022 audit later this year, usually around December timeframe we do it. So next year I'd have an update and really could see kind of 3 years worth of data on how we've improved on that. But as you know, we can always improve, and there's a lot that's changing. As we see these things shifting, whether it's Internet of Things or how ransomware shifts, we need to be aware of, you know, what's happening in the industry and stay on top of it. So that's ends my presentation. I'll stop sharing my screen now, and if anybody has questions or would like further follow-up, I'm happy to provide it.
Well, thanks, Jason. And I have to say that your leadership on this issue has been really evident. I think it's no accident that we've had good experience so far, knock on wood, of course. I think that that's a very big factor in how we've been doing. So thanks so much.
Here. I think we can all second that.
Yeah. My only comment is that certainly, you know, in the insurance field, this is the hot topic, right? And we're seeing claims activity is not just with the big companies or municipalities. I mean, everyone is vulnerable to it. And one of the strengths of the insurance program, even though the players keep changing and lots of people are dropping out of the market because there's just so much loss activity, and these claims keep getting bigger and bigger in terms of settlements if there are third parties involved, is that the applications are extremely complicated and lengthy. And I'm sure, Jason, you've seen that even just for the town, and they're always looking for more information. But one of the benefits when you when you finally get some coverage in place is that the resources that these insurance carriers then are providing to their insureds helps them come up with these kind of procedures that you're developing and ways to test and ways to educate their employees to prevent, cyber attacks. So all of this is, it's all for the good. And I don't want to get off topic, but I would like to, since we're talking about all of this stuff, I always look for an opportunity, and I think maybe this group is not a bad place to put this on the table, is the issue of being able to communicate within our town effectively and efficiently, not only because it's good communication, but it's also a safety factor. Now, I know you're not really focusing really on the cell service and our need for better cell towers, but I see that as also a real security concern and a safety concern when people can't communicate well in town. And so I don't want to detract from this cyber conversation because this is really important, but I do also want to kind of sort of reiterate how important it is for us to have better security and better safety ability to communicate within the town on our cell services. So that's my little pitch there.
Jason, a comment and a question. Thank you for the presentation. Comment, I assume in addition to spear phishing that there are more general probes that you're experiencing on a daily basis.
Mm-hmm. Yes.
Yeah.
Would you like me to speak to that?
Sure.
Yeah. So spear phishing is a very targeted way of trying to come into the network, but we get phishing messages obviously all the time, and these are just sent generically to users hoping that they'll click. As part of our cybersecurity awareness training, we do have phishing testing campaigns where we do. So what will happen is every quarter or so, messages will go out to all users at random times throughout a couple-day period. And if users happen to click on those things, then it will bring them to like a teachable moment thing, and it will walk them through what they could have seen in that email that they, would have alerted them to not click on that, and find it suspicious. It takes a lot of time. Actually, this is a really, really good thing. It used to be that those phishing messages just went out to everybody, no issue. Now I have so much work to do just to get those messages to users, because all of our systems block them in so many different ways. We have 2 different email filters that block them. We have our browsers are now blocking them. We have Office 365, which is now blocking them. Outlook is blocking elements of them. So these are good things. Like, people are waking up that users need tools to understand when something is suspicious and not just rely on their past security education. But those campaigns are really unsuccessful among our employees, which is good. We have a 1 to 2% click-through rate of those, and statewide the average is 3 to 4% of people clicking on those. Some of those campaigns are going to be more successful because they target applications or systems that we use. Others are going to be pretty obviously fake to users if they're not systems or software that we use. The most clicked one that we've ever had was about the employee dress code changing. Apparently that got some people really fired up, and that was a very effective campaign to have people click on. HR was allegedly sending an email about the new dress code, and people were very excited to that. And I got a lot of emails of people, I'm sorry, I clicked the link on the dress code. But yeah, so, and the good thing is that people, they get those and they understand, like, oh, this is a moment where I can learn, like, there were signs in that email that I kind of skipped through. And I think that that's a great thing. We don't shame people, we don't punish them. We say, hey, this is a learnable moment here. There were signs in that email you shouldn't have clicked on. But in addition to just emails, we do get probes and scanning of different servers or services constantly. One of the best things that we can do is just shut off any access that we don't need to the outside world and our environment. One of our priorities since I've been here is to move things to both diversify the way that we get to our data, and also move it outside of our organization, our internal network, unless we absolutely have to have it. So some systems we have to have. For instance, our fuel system that tracks our fuel, it's an internal application. It connects to these sensors that are inside, and we don't have companies yet that make sort of like a fully cloud-based system in that way. But other areas we can move to a cloud-based model. So when we talked about Munis allows you to install your software on-prem or in the cloud. And if it's in the cloud, it'll be updated more quickly. The support works a lot easier. You don't have that burden of the physical infrastructure. You don't need to worry about outside access for employees who need to, the school, for instance, they're going to need access to Munis. So now we need to carve out a hole in our firewall for the schools to come in, or we need to make sure these additional 100 people have VPN access. So by putting it in the cloud, we've now enhanced the security and also limited our attack surface so that people don't need to come into the town. So we're seeing fewer of those types of things, but we see them. We do see them. We see password spraying attacks where people just try every password. And you just have to learn from each of those and say, okay, how come this account didn't get locked out immediately after they tried 5 incorrect passwords, or what's happening here? But yeah, we see those things all the time, and those are easy for attackers because they can just run a script or control a botnet army and just let it go, and they don't have to actually sit there and do anything. The other ones require effort to spoof or impersonate somebody. They have to look and find out who somebody's manager is, and then what their role would be, and then create an email address based on that role. So yeah.
Okay.
Jason, just a quick question. All of this involves more money and more staff. Could you just tell us a little bit about what increase in staff there has been during your tenure, and just in terms of additional costs overall for, the insurance and additional equipment? What's the financial impact and staff impact been?
So far, nothing in specific equipment, nothing that wasn't already planned. We are expecting that in the next 6 months, we'll be moving to a different antivirus platform that will be more, probably on the order of $6,000 to $10,000 a year. So not a huge cost, but that would get that 24/7, staffed response for those incidents that might happen. And In terms of staffing personnel, we have not increased security personnel. The IT department has one additional role that they didn't have before I started, which is the IT business systems analyst. Now that person does actually have play a small part in the cybersecurity program, because the goal of that role is to work with other departments and enhance their connection integration to different software and systems. So they will be sort of an apostle, if you will, of the security program, but that's not their specific job duty. They will be more visibility from IT into different business applications and different divisions, departments, but it's not really a pure cybersecurity role. We do have an IT operations manager, which is a different title, but this similar position already existed in the past. That person, when that position is filled, will play more of an active role in the cybersecurity program and will be sort of in charge of the operations of the antivirus and the firewalls and detection and response.
Thank you. Very interesting.
Quick
Okay,
question. I know the hour is late. Just a real quick question. Are you and Peter Kelly coordinating to the full extent that you think we can for purposes of shared intelligence and economies on investments toward cybersecurity?
We're definitely consulting, coordinating. I have recommended that the school join the MS-ISAC and get that intelligence sharing. We have coordinated on different issues that have popped up. We have been an asset to try to help them with some things that have popped up. In terms of licensing, and also the cybersecurity awareness training grant, we encourage them to apply for that, and we can apply jointly together next year. And so it's my hope that they'll participate in that. The school uses a different email system. The school, being an education organization, has a lot better access to cheaper software and security products than the town does. So sometimes it doesn't benefit us to join forces, because they would end up paying higher rates for the software, because we're more considered government and they're considered educational. But we do definitely coordinate, and I have passed along specific information about threats that I've received to them to make sure that they're aware that they've been seen in surrounding communities and that they need to be aware of them. So I feel like we have a good line of communication, and I'm happy to work with them as much as they would like to.
Wonderful. Thank you.
Okay, I think I need to stop the discussion at this point. So thanks very much, Jason. And is there any other business that we need to conduct this morning? Okay, seeing none. Is there any public comment? If you have a public comment, please use the raise hand feature under reactions. State your name and make your comment. I am not seeing anyone. So at this point, then, I'd like to adjourn the meeting. Thank you very much for your time today, and we will see everyone again in December, or January, excuse me. January 10th at 8:30 a.m. Thank you very much.
Thank you.
Bye.
Thank you.